Today we're going to explore the ProShares Ultra Pro QQQ, or TQQQ, an exchange-traded fund or ETF designed to deliver 3 times the daily returns of the NASDAQ 100 index, which includes many of the biggest technology companies in the market. Before we jump right in, first let me introduce myself. My name is Wes, and for the last 2 years I've been researching ways to make passive income in both the stock market and in cryptocurrency, and want to bring my results, good or bad, to you through this channel. If that sounds good to you, make sure you subscribe to the channel, and a like on this video would be greatly appreciated. Okay, to start, the TQQQ is different from typical ETFs because it uses leverage. This means it aims to increase your gains by 3 times, but keep in mind it also multiplies your losses 3-fold. For example, if the NASDAQ 100 goes up 1% in a day, TQQQ tries to increase by 3%. But if the index drops 1%, your investment in TQQQ could lose 3% on that day. How does this work? Well, the fund uses financial tools called derivatives, like futures and options, to get this 3 times exposure. It doesn't just buy the stocks directly, instead it makes contracts that track the NASDAQ 100's daily performance. TQQQ includes some of the largest non-financial companies listed on the NASDAQ exchange. It's heavy on technology companies like Apple, Microsoft, Amazon, and Nvidia. These companies shape how the index moves and thus impact TQQQ's gains or losses. Take a look down the list. It's Nvidia, Microsoft, Apple, Amazon, and Broadcom, and then 2% in Meta, and then it looks like some of these other smaller ones are coming up the list: Palantir, Costco, Google, Alphabet, Tesla, Netflix. And then AMD is actually in here. It's almost up to 1%. Leverage means risk because TQQQ resets its exposure every day. Holding it over long periods can lead to unexpected results. In volatile markets, you might see your investment shrink even if the NASDAQ 100 is roughly flat over time. It's important to know that TQQQ can lose value fast if the market is unstable or falling. Strategy with TQQQ has been buying the shares and then, actually selling puts to start, and then when I had to buy the shares, then I am selling covered calls against the shares. I've been doing that for about 3 months now, and it's worked out very well. The TQQQ has gone basically just up only since then. There has been some drops with the rest of the market. Here's an overlay of the QQQ and the TQQQ. The white line is the regular QQQ, and the TQQQ is the red and green bars. So the TQQQ has outperformed the QQQ, but at the same time, if it were to go down quickly, the TQQQ is going to go down a lot faster than the triple Qs would go down because of the leverage. TQQQ charges higher fees than regular ETFs, around 0.84% per year. These fees cover the costs of managing the leverage in contracts. Over time, fees can reduce your overall returns, especially in slow or down markets. Who should use the TQQQ? TQQQ is mainly for active traders who want to bet on short-term moves in the tech sector and can handle large swings in value. It is not recommended for long-term investors or those who are risk averse. Close monitoring is essential. How to use the TQQQ? Traders often use it to capitalize on a short-term trend or as part of a larger trading strategy like the one I explained before. Because it resets daily, it's being treated, or best treated, as a short-term tool, not a buy and hold investment. Although since inception it's up 41.7%, which is not too bad. In summary, TQQQ offers the chance for higher returns linked to the NASDAQ 100, but comes with significantly higher risk. Understanding leverage and market conditions is key. Always evaluate your risk tolerance before investing in leveraged ETFs like this one, the TQQQ. Transparency, I am invested in the TQQQ, and I think it's going to be good for the next few months. I think once the first of the year next year turns, I may try to sell out of it into something, some stocks that are not as aggressive. 3 times leverage is a lot if you're not used to that. You just have to watch the charts and keep up with it and make sure that you're doing some type of strategy where, like selling covered calls where you can get some passive income through holding it, as well as the appreciation of the price itself. What other stocks or ETFs would you like me to cover in the future? Please leave those down in the comments. I really appreciate all my subscribers. Thank you for watching and have a great day.